folks, last week tornadoes, this week fires in Northern Ontario smogging out most of where I live, yet here I sit obviously talking about the correction we are seeing in the stock market. So in the clarity of my transparency and all the wonderful homework I present to you, consider hitting that like button because soon I might have to move. So let's get into this by kicking it off. We're going to be going over a lot today, starting with the VIX, comparing it to some cool correlations with the S&P 500. We're going to hear from Jimmy Chill himself, the controversial Jim Cramer, and then we're going to talk about my stock watch list as I've been stacking cash like a madman looking for these opportunities that are clearly on the horizon, or I hope they continue to be. So first of all, the VIX, the volatility index, the trading going on in the market. And yes, we have a heavy spike into this sell-off, guys. I think the VIX here is trading up, what, if I can get my mouse to line up, about 37%. So this is a relatively huge spike, but I want to show you something really fascinating. I know this is an obvious correlation, but it's really neat to see how this has affected the S&P over the last year. So let's go back to the last spike here, which was what, between about May 11th, 10th, 11th. So sometime between May 7th to May 11th and 12th, we saw a massive spike of, how high did this go? We're looking at a 65% spike in the VIX. What did that do to the S&P 500? Well, we take a look. Here's May 6th, May 7th to about May 12th. There was about a 4% correction in the S&P 500. So let's go back a little farther to the last major volatility spike, which was probably what, around January 25th till about the 27th. So taking a look all the way back to January here, folks. Here we got it, January 25th, 26th. So right around the 27th here, we saw another 3-4% correction in the market. Not that that is an indicator of what is about to happen, but maybe we see another 3-4% just like we have in the past. And currently we're down about 2.88%. So maybe we go a little lower if the past predicts anything into the future here, folks. Now look, I'm not going to make any bold statements because nobody can really predict what's going on, except of course, Jimmy Chill himself. So let's listen to what Jim Cramer has to say and then dive down into some of these individual stocks. Enjoy.
Facebook, Amazon, Netflix, Alphabet, they've all held up a long time. And I think that once you see those roll over, then everything's rolled over. And after that, once everything's rolled over, then you're going to start hearing analysts saying, you know what, things are going to start rolling over. And that's when you buy. I am being cynical. I mean, I read these pieces. These guys are all going to come on our air, and they're starting to talk about things rolling over. Like, where have they been? The only thing that hasn't rolled over is FANG. And FANG gets rolled over last, and then you got to go back. Unless you're into the Reddit or the 10 times sales stuff that has come public endlessly. Andrew, you can't walk down here without getting hit by a SPAC. I mean, it's amazing, and they keep pumping them out. That has to stop. We got to stop with the underwritings. Who can even keep track of these companies?
But does this mean that Jim Cramer is basically saying, you know what, I'm going to hang out for a while and watch all this come in a little bit before I buy? Is that what you're saying?
Yeah, absolutely. Because you have to deal with all these analysts who are suddenly discovering that the market's coming down and blaming the Delta variant.
Well, the question, by the way, is when you say let it come down, how much are we talking about? Is there a 5% correction in here, a 10% correction?
I
People
think
would
5,
say a correction
3 to
can't.
5. 3 to 5. We already had a lot of 10. I like 3 to 5. I mean, I want to see FANG go down, even though, of course, I love FANG. But I look at the cruise ships, and I'm saying, did people just notice that they're going down? Royal Caribbean down 20? I mean, Norwegian Cruise was at 29 when they decided to vaccinate everybody, and then Florida said that you can't enforce it. Hey, you know what, Andrew? There's a lot of people doing a lot of stupid things. And when you listen to Gottlieb saying that Facebook could be policed, yeah, you have to believe that Facebook stock's going to go down here.
So Jim Cramer, they're clearly thinking there's going to be a continued correction, but it's just, another one of these buy the dips before the rips. It's just a matter of when does the rip come, and hopefully we see farther dips. So let's get into some of these individual holdings and just see what is going on here. Kicking it off with the FANG. Not that Microsoft is really part of the FANG. That would be like the FANGum. Got to add an M to that FANG. Because we got what? Facebook, Apple, Amazon, Google, Netflix I missed in there. And yeah, they got to fit an M in there somewhere because Microsoft up 27.25%. $277 a share. This is mind-boggling to me, and it is only down 1.95%. Let's hope it corrects more because this is one of my favorite stocks of all time. And if anybody's looking for an opportunity to get in, let's hope we see what we've seen in the past, which is actually kind of similar to some of the VIX moments there, but it usually hits lows of what, maybe between 8 and 10% on the drop. So you just keep your eyes peeled in case this little sucker does a bigger dip. But my favorite of the bunch, one I would still buy, it's my always buy rating stock, is Facebook, of course, because it trades at the lowest valuation, 28 PE compared to Microsoft sitting at a 37 PE, and it is down 4.5%. thanks to some of that political rhetoric coming back up, but year to date up 25.29%. Do we go farther? Here's the hoping, baby. Let's talk about, I know it's so counterintuitive when the market starts tanking and people freak out, guys. This is my favorite time ever because, like I said, I've been real patient. And we're going to talk about my favorite stocks that I'm probably going to buy here shortly. But talking about Apple, bar none the most volatile of the bunch here, folks, considering this thing has done what, like 7 to 10% corrections a lot this year. I mean, at the lowest from the highest, it was down almost 18%. And right now we were just seeing what, like a little hiccup of a 4.4% pullback. And Amazon as well, trading down 4.8%. Actually, the chart's very similar to Apple, very volatile mood swings. So when it comes to these ones particularly, I'm kind of a little bit frustrated because if they pull back going into earnings and earnings blow out EPS like they have the last couple quarters here, guys, these things are just going to shoot up right away. Whereas I was hoping that we're going to see nominal EPS and we're going to see a little bit of a pullback. So now I'm kind of confused because do we see a greater pullback if that misses EPS, or is this going to price in any of the EPS misses that we may see? I don't know. The market's relatively frustrating right now, folks. Leading into the one stock on my buy list that I've already started buying, Google. Some of them those A-class shares here, GOOGL, guys. I love the A-class. They give you some voting rights compared to the regular shares. This sucker's trading up 44% this year, which is crushing all the FANG stocks combined pretty much. And I'm really hoping it dips a little lower, just like Microsoft, because they're both only down 2 to 3% here. So a bigger pullback. I'll be loading up on this one 100%, and then some dividend stocks to throw in the mix. MPW. This sucker's already trading down 10%. This is already in a buying territory. I am still furthering some due diligence and hoping it continues to pull back with the sell-off, paying a 5.53% dividend, a really healthy PE ratio at 21. Hope it dips into the teens. But nonetheless, I will be doing a very precise video on this one coming up very shortly. If it's something you want to see or discuss, let me know in that comment section below. And then finally on my buy list, one that I've already started acquiring, just like Google, Algonquin Power. And for reasons like we're seeing right now is why I don't load all my money in just at once. I'm usually a little bit hesitant in moments like this, but this is going to give me a clear, broad investment decision because obviously none of these stocks sit in the same sector, right? Like Google's FANG, we got MPW's a real estate healthcare company, and then Algonquin Power's a Canadian natural gas utility. They do everything from renewables, and it is trading down 15.39%. So this one's in heavy discount territory with a PE of 10.2 and a starting yield of 4.44%. Can't go wrong with these guys. And oh, baby, do I got some cash. However, I'm going to be sitting on my hands, maybe for another week at the most, depending on what the next couple days bring, because obviously if we see a 5 or 10% correction across the board, I will gladly start picking up some shares incrementally. I don't know if I'll do the full buys that I'm used to. Like I said, I'm used to just throwing $5,000 at a time into the market, but I may divvy it up slightly just to cost average into these a little bit more, just in case I end up buying them before earnings, because I'm telling you, things are going to get a lot more volatile going into this earnings season, which is only coming up in about a week. So we do have a little bit of time still. And finally, just taking a look at the broader markets as well. Something I haven't touched base on in a while is Bitcoin. I still have my Bitcoin position. I've been desperately patient. This is probably one of my most patient positions because me and my boy Matt have been like, hey, if this thing drops into the 20s, I am down to keep adding to the position. But it's testing those territories right now, guys, holding right around $30,700. Aside from that, just scrolling through, Tesla's the only one holding up into after hours here, the only green of my entire stock list with Hydro One, which isn't even green, it's just flat. What else do we got? Actually, okay, a little bit of green. Pepsi, Kimberly-Clark, some of my consumer staples. But I mean, when we're talking about green, we're not talking about real green here. I mean, nothing's up like more than about a few points of a percent. Other than that, across the board, Jimmy Chill does not like them SPACs. I don't know why Jimmy Chill's got his chuddies in a bunch when it comes to the SPAC market. Yeah, there's some crazy overvalued stocks in there, but there is some beauty about to happen, and I honestly think it's going to be with SoFi Technologies here. Probably the only SPAC that I would buy because it's a SPAC with real revenues, real growth, and is relatively trading at a decent value here, in my opinion. I might make a specific video on this. It's trading down 36% from its all-time highs. Also, let me know in the comments if this is a video you want particularly about, just specifically about SoFi. So this is kind of what's going on in the market while the world is falling apart around me in a pandemic, on-fire tornado. Never in my life of living here really seen a lot of this stuff. So pass the question off to you. Let me know what you guys think as well. Stay cool, stay awesome, and let's hope I make it to tomorrow.